What if I told you that one extra payment, just one, could save years off your mortgage and save you thousands of dollars in interest? Most homeowners have no idea how this actually works, and honestly, neither did I when I first got into real estate. Today I'm breaking it all down. No fluff, no jargon, just the real math behind your mortgage. Stay with me because by the end of this video, you are going to look at your monthly mortgage statement completely differently. Hi everyone, welcome back. I'm Neelam, your Seattle area real estate agent. Whether you are buying your first home, thinking about your next move, or you are already a homeowner and you want to build equity faster, this channel is for you. Make sure you are subscribed and hit that bell so you never miss these kind of deep dive videos. Today we are going to talk about something I get asked all the time. How do mortgage principal and interest actually work? And more importantly, what happens when you pay extra towards your principal? Setting the stage. Okay, so when you take out a mortgage, your monthly payment is split into two buckets. Every single month, bucket 1, interest, that's the cost of borrowing money. Bucket 2 is principal. That's the actual loan balance you are paying down. Here's what most people don't realize. In the early years of your mortgage, the vast majority of your payment goes towards interest. Remember the first bucket? Not principal bucket. It can feel like you're barely making a dent, and that's by design. It's how amortization works. But once you understand math behind it, you can start using it to your advantage. So let's walk through it. The math, how the interest is calculated. There's no magic formula here. It's actually really simple. Your mortgage interest is calculated once a month based on your outstanding loan balance at that time. Here's the formula. Monthly interest equals to annual interest rate divided by 12. Multiply that with outstanding balance. Let me walk you through an example. Let's say you have a 6% interest rate on a $400,000 loan, which is very realistic in the Seattle area depending on when you logged in that rate. Take that 6% divided by 12 months equals to 0.5% per month. 0.5% of 400,000 comes to $2,000. That is your interest for month 1. Now let's say your total monthly payment is $2,400. That means only $400 of that first payment goes towards actually reducing your loan balance. The other $2,000, that is interest. Next month your balance is now $399,600. So your interest charges drops ever so slightly, and a tiny bit more of your payment goes towards principal, and so on and so forth, every single month. This is called amortization. The key takeaway here, you are only ever charged interest on what you still owe. That's actually good news because it means anything you pay down reduces your interest charges. But what happens when you pay extra towards principal? This is where it gets exciting. Let's say you get a bonus at work or a tax refund or a gift, and you throw an extra $5,000 at your mortgage as a principal-only payment. Your monthly payment does not change. Your lender is not going to call you and say, hey, your payment went down. Nope, same payment. But what does change is how much of each future payment goes towards interest versus principal. Because now your balance is $5,000 lower, your interest change next month is lower, which means more of your regular payment automatically goes towards principal. And that snowball, my friend, keeps rolling. Here's a real world way to visualize it. Every mortgage comes with an amortization schedule, a table that shows exactly how much of each payment goes to interest and how much goes to principal, all the way to year 30. If you have never looked at yours, I highly recommend pulling it up. When you make a lump sum principal payment, it's like jumping ahead of that table. You are essentially skipping future payments, not literally, but mathematically. You are knocking months, sometimes years off your loan term. For example, on a $400,000 loan at 6%, making just one extra $10,000 principal payment in year 1 could shave off roughly 2 to 3 years off a 30-year mortgage and could save you $30,000 or more in interest over the life of the loan. That is not nothing. Common questions I get. Question 1. Does it help to pay my mortgage twice a month instead of once? Great question. And honestly, sort of. Here's the thing. Most mortgages calculate interest once a month. So sending 4 smaller payments in 1 month does not reduce your interest charges more than sending 1 payment. They all go to principal once the month's interest is covered. Now the bi-weekly payment strategy is slightly different. If you make half your mortgage payment every 2 weeks instead of 1 full payment monthly, you end up making 26 half payments a year, which equals to 13 full payments instead of 12. That one extra payment per year does make a meaningful difference over time. But it's the extra payment that's actually doing the work, not the frequency. Second question, should I pay off my mortgage early or invest instead? This is the big debate, and honestly, there's no one-size-fits-all answer. It depends on your interest rate, your tax situation, your risk tolerance, and your goals. Generally speaking, if your mortgage rate is higher than what you could reasonably expect to earn investing, paying down the mortgage makes sense. But if your rate is low and you have strong investment options, some people prefer to invest the difference. This is something you should talk through with a financial advisor who knows your full picture. What I'll say as your real estate agent is this: building equity in your home is never a bad thing, especially in a market like Puget Sound where home values have historically appreciated over time. Third question, do I need to tell my lender the extra payment is for principal? Yes, and this is important. If you just send extra money without designating it as a principal payment, some lenders will apply it towards your next month's payment instead. Make sure you clearly indicate it's going towards principal only, either in writing, in your online portal, or on your check memo line. How this applies to buyers right now? So what does all of this mean if you're buying a home right now in the Seattle metro area? Rates are higher than they were a few years ago. There's no sugarcoating that. But here's the mindset shift I want you to have. Every dollar you put toward principal today is working harder for you than it would at a lower rate, because the higher the rate, the more interest you are being charged, which means extra principal payments have an even bigger impact on what you save long term. Also, this is the strategy I talk to a lot of buyers about. If rates do come down in the next few years and you refinance, you will be refinancing a smaller balance. That's a double win. And if you are selling, understanding equity is everything. The faster your principal balance drops relative to your home's value, the more equity you have and the more leverage you have in your next transaction. All right, let's bring it home. Here's what I want you to walk away with today. Number one, mortgage interest is calculated monthly on your outstanding balance. Every dollar of principal you pay down reduces your future interest charges. Number two, extra principal payments don't lower your monthly payment, but they shorten your loan term and save you significant money over time. Number three, bi-weekly payments work because of the extra payment per year, not the frequency itself. Number four, always designate extra payments as principal only with your lender. And number five, whether you're buying, selling, or already in your home, understanding how your mortgage works puts you in a driver's seat. If you found this helpful, please give this video a thumbs up. It really does help the channel grow and keep me motivated making content like this for you. And if you have questions, drop them in the comment below. I read every single of them. If you're thinking about buying or selling in the Seattle or Eastside area, Bellevue, Kirkland, Redmond, Sammamish, Chautauqua, anywhere in Seattle Metro, I would love to help you. The link to connect with me is in the description. I'll see you in the next one. Take care.